Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant creates consistent, high-probability trading systems for the financial markets and has applied them over the past 5 years. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his high-probability indicators for free. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, it's Grant. So thanks for joining. So the title of this podcast, Hey Mom, GOOG's got a wedgie. So market structure matters. So I'm not going to go into family wedgie stories. I'm sure we all have some of those to share. But the point of this podcast is that structure matters. Market structure matters. So I'm a personal fan of having a view that shows real price movement with time as a second-class citizen. So that always is critical for me to be able to see what's going on with time on that. So for stocks, the way I arrive at that is I look at the average true range of a particular stock, and then I create a range chart that's related to that ATR. Now, if that doesn't make any sense to you, then reach out to me and I'll be happy to answer your questions. So today, we're going to be looking at GOOG, and so GOOG. I have created a range chart that's based on the ATR. I want to see the market structure of a stock for its typical movements, but more importantly, I want to know when it's behaving in an atypical or non-typical fashion. Now, my favorite two tools for visualizing market structure are channels and wedges, and I put them on the range chart for for a particular stock. So by now, I'm going to relate all of this to the market engine and the market effectiveness chart. So I'll introduce both of those here in this podcast today. And I've also updated my site. So if you go to financialinvestingradio.com, if you scroll down, you're going to see a list called podcast charts. And so this will say FIR number 13 and then the title. If you look to the right of that, there will be two links there. You can open up the charts for those two links while I go through and I'm going to explain using both a market effectiveness chart with the market engine getting us into trades. All right. Okay. So real quick here, I'm on the GOOG range chart. So if you go get that, so that's the trading chart. Okay. So that's based on the ATR. Later at some other time we can talk about how I arrived at the ATR for that and what percentage of the ATR I use. Bottom line is I've drawn a wedge. So if you look at that, you'll see some light blue lines that are a wedge. It'll take a little bit to get your eyes used to this, and I'll talk about the different elements on here that comprise the market engine. All right, so I've got a wedge on here. It starts all the way back to March 17th, 2017 and goes up to about June 8th. All right, and now here's where the trade scenario plays out that I wanted to focus on. So on June 6th and 7th, the market effectiveness chart, so hopefully now you have that open, that chart for GOOG shifted gears on June 6th and 7th. Now, what I've been doing is I've been highlighting these with yellow circles. So hopefully you can see that. You'll see right around the 6th and 7th, you'll see where the red line comes down, pops up, comes down again, pops up. And then I've highlighted just right after that. So these, I call that the gear shift, all right? So that's shifting gears. When it comes down and touches that on that effectiveness chart, it tells you, okay, get ready for a potential shift in direction. So that happened on the 6th and the 7th is when the gear shifts took place. And then here we come up to the 8th. And so on the range chart, there on the trading chart, on June 8th, it gave a signal to the downside. So what does that look like? So there's 3 dashed lines on here, right? And so those 3 dashed lines on this is a yellow, a red, and a green dashed line. Those are part of the market engine. And then on the bottom of that chart, there's a market engine indicator that's tracking the NASDAQ behavior, okay? And we want to see those line up. So if you see where that vertical line is that I captured on that picture, there's 2 yellow circles there. What's happening is the market engine indicator on the bottom comes up and then starts to turn back down. At the same time, we've got those 2 key, in this case it's the yellow and the red dash, drop down below this ATR range-based chart. Once that's done, so now there was a 2-step process. First step was the 6th and 7th, there was shifting of the gears. That tells us underneath the hood, things are trying to, make a course direction. That's not our signal to trade it, though. We need to see on the trading chart, we need to see the market engine itself, both the indicator and the bottom as well as those 2 dashed lines. In this case, they both come below, and we get the confirmation that says, okay, in this case, we would go short on GOOG for a period of time, in this case, for a few days. Now, the thing I wanted to highlight here is that all of this is happening near the tip of the wedge. And so one of the great confirmations is when we watch market structure on a range chart like this, and by market structure, I mean the structure as shown in this case by a wedge, or if it were a channel. One of the things that you know about the wedges is the further you get out to the tip of it, the less support and resistance there is on it. So that's just another visual confirmation for us that it's coming all the way up here near the tip, and now it starts to work its way back down and breaks through the tip after those confirmations have taken place with the market effectiveness chart and then these market engine indicators on there. All right. So the key is to know, though, when you get near the tip of the wedge is, all right, fine, I'm near the tip. Which way is it going to break? Well, and what it turns out here is that we've got this, in this case, of course, the market engine with those 3 dashed lines, 2 of them come across, and it tells you, hey, probability is very high that this is going to go down in this particular case. All right, so combining wedges and channels, right, for illustrating structure with the market effectiveness chart and the market engine indicators on the trading chart, those do bring higher probability to our trading decision. So again, I put these charts up onto my site at financialinvestingradio.com. Again, scroll down. Once you get there, you'll see 2 links, a trading chart with market engine and market effectiveness chart. You'll see those 2 links there. You can start looking at these pictures now, and I'll be referring to those as we move forward. Okay. Oh, I just wanted to, before I quit here, excuse me, for your examination, I also just went back and was looking at other areas on GOOG, G-O-O-G, where there are some gear shifts, on those dates. So this is a call to action, right, in terms of doing a little homework yourself. Let me throw out some dates. What I'm asking is that you go back and you look at those dates and see what happens near those dates. Take a look and let me know what you find. So here's some dates, okay? On February 2nd, February 27th, March 8th, March 24th, April 4th, April 10th, April 13th, May 2nd, and then June 1st, and then June 6th and 7th. And I just went through the June 6th and 7th one here in this podcast. Now, take a look at those. I only went through the one, but those were several dates to go back and take a look. Those were other gear shift opportunities that took place on the market effectiveness chart. And then look to see if there were any changes that took place not long after that. Now, you can reach out to me at grant@financialinvestingsecrets.com. So for now, we can use wedgies for what they are really meant to be, not maybe perhaps what we might be thinking of. Anyway, hey, thanks for your time. Trade safe until we chat again.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free high probability indicators before your next trade. Visit financialinvestingradio.com now.